Alrighty, hello everyone. Hope we're doing well. Happy Sunday. Sure, audio's all good on my end. Alrighty, we are a green light. Hope you guys are doing well. Hope you're having a great weekend. Let's get down to the business here today. I know I kind of gave you guys the link a bit late here. I had planned in my schedule from last Sunday to do 2 p.m. here today, but because I have family over, it's festivities in the country that I'm living in right now. So that is why I'm using the weekend to spend time here with family. So it's a party at the Richards house. So with that being said, wanted to get on here a bit earlier with you guys so that I could still make time to get this information out for all you guys that are in the community that we've been doing the reviews, or usually the weekly outlooks in there, but wanted to make sure I at least got this out here today because we have elections on Tuesday, which will absolutely impact trading. So I wanted to make sure I would at least have time to go live on the YouTube for those in the community, and obviously for you guys outside the community are also able to benefit from this as well. So I wanted to share my thoughts, how I'm going to be attacking the week, and what I'm looking at going into elections here on Tuesday. So with that, let's sort out the business here. Hope we're all doing well. Hello, Silver Bullet Trader. Good evening. Cleo, let's get it. Let's get it. Unicorn Queen, hello. Tommy, my man. Hope you're doing good, brother. Tawari, hi, everyone. Hope you're doing good, man. Frank, what's going on, brother? Glad to have you. Reaper, just in time, my man. Absolutely. Appreciate you joining us. Joe, hope you're doing good, brother. Ian, my man. Hope you're doing good. Eslam, hello. All right, guys, we got a full house today. Should we avoid trading on Tuesday? Absolutely. You want to be careful, especially after the elections. That is going to bring a lot of volatility. And it's not normal volatility, right? Because as traders, and I'm going to get to the point here in a minute, but bear with me, right? Because there's a distinction. As traders, we like volatility, right? Because volatility creates price runs and creates opportunities for us. And if we know how to read price charts, then the more price moves there are, the more opportunity there is to make money. However, there is volatility that we do not want to trade, and that is called manual intervention, CPI, FOMC, non-farm payroll, elections, surprise rate announcements, when bombs start going off across the world. Those are events that create what's called manual intervention, which creates volatility, but that's not being done algorithmically, but it's being done manually by the folks that control the markets. Those are periods of time in the market where I do not like to trade, because when I am trading, risk always has to be managed phenomenally, right? That is one of the key things that keeps me profitable, allows me to keep what I make, is making sure risk is always being managed. So with that in mind, if that's the top of my priority with my trading, not how much I can make, but how much I'm risking, I don't like to trade environments where I can't manage risk, right? Because when NFP happens and it shoots hundreds of handles up or down, or when the election happens and it starts moving hundreds of handles, those are market conditions that are much more difficult to manage and measure risk. So those are conditions where, obviously, if you've been working with me, you guys know we look to do things at a professional level, which is not just gambling every time there's a big move, right? We're not thinking, oh man, it moved, 800 handles without me, and that's losing traders thinking, right? Because if you're thinking like that, that's probably the reason why you're not making consistent money. Professional traders, people that have a more professional mindset, the focus is keeping risk low and trading in conditions where risk can be managed very, very well. So with all that to say, that's the long-winded way to answer why I'm avoiding Tuesday, why my team is avoiding Tuesday, and why we're going to be placing most of our focus after the elections. Because if you just think about it logically, I said I was going to be done answering it, but I want to make sure you guys understand, right? If you think about it from a common sense standpoint, there's folks in these markets with deep pockets with big money, right? Millions and billions. Fund level traders at hedge funds, lots of money. Do you think they're going to position themselves ahead of an uncertain event like the elections because I want to trade Tuesday morning and the AM session is lit, so I'm going to risk money here ahead of the presidential election? Absolutely not, right? They're thinking about it more from a professional level. Okay, does it make sense to take on risk before an uncertain event? And that's the difference in a more of a gambler's mindset, which is I want to trade every day, and a professional mindset, which is I'm going to risk capital in the best conditions that there are, right? And that's a paradigm shift that most traders have that gets them to unprofitable over to profitable. And that's why it's something I emphasize and discuss a lot, because it's extremely important. So yeah, Tawari, that's the game plan for Tuesday. That's what I'm looking at. Catching the swing short on NASDAQ was fun. Shared entry in the Discord. Nicely done. Nicely done. Latest trends. Hello, Chris. Glad to be here. Glad to have you, man. It's why I lose in volatile market with large swings. Yeah, and that may be why. Because if you're trading manual intervention, that's a difference. That's the difference in volatility that we don't want to trade versus volatility that we do want to trade. Right? Like volatility when the market's moving regularly, algorithmically, these are market conditions that we prefer to trade. So let's get into the business here. These were levels that we're working with the group here on Friday. And then if you remember the level we were talking about here, see that made our high of the day here. And you guys remember why we were looking at this specific level here, right? Because lower, higher, lower, it leaves it. This is all balanced price range, right? So this is all efficiently delivered range. So the market does not need to trade up and close in the entire fair value gap. We'll look for it to stop here. And then you'll see that also overlaps with the former new day opening gap and several other factors for why we were able to see a new run into a new high of day here, right? But with that in mind, that's it from last week's annotations. Don't need that anymore. I'm going to clean up the chart. Before I get into the chart, I do want to touch on the forex factor. So Monday, no news. Today's the daylight saving shift. So usually after daylight savings, generally I'm waiting a day. So Monday, I'm not going to be pushing a whole lot. It's also the day ahead of the elections, of course. So I'm going to be much more relaxed going into this week. And my focus is going to be Wednesday, Thursday, Friday, and then the rest of November, the rest of December. I'm expecting a very volatile month. Because of the elections, everything going on in the world. And I'm thinking that Tuesday is going to be a catalyst to see very clean opportunities top down in the market. So I'm electing to wait till after the election. I'm sure the markets will be moving all around Monday and Tuesday. If there's setups that make sense and I have more clarity when I get to the charts, then obviously something can be looked to be taken, but my risk has been very dialed down ahead of elections. On the other side of that, there should be more clarity and cleaner one-sided opportunities for me to then feel comfortable raising my risk back up to usual thresholds that I'm comfortable trading at. So with that in mind, that's the business for the economic calendar. How you can attack it, the specifics between what sessions to trade, how we know that, that's all going to be covered in the weekly newsletter, which is sent to your inbox every Sunday if you're signed up in our mailing list. If not, you can check it out on the website and it will be in our lovely learning center, right? And from there you can see the economic calendar, all things that are related to when we're trading, why we're trading, and also understanding of COT and seasonal tendencies. So if you have not been knowing, for example, where dollar, bonds, and those assets are going, then it's probably because you're not in our weekly newsletter, right? If you have been there, you've known why we've been looking for higher prices, not just what I'm looking at here on the technical side, but how we also confirm that with macro analysis and understanding of fundamentals using COT, seasonal tendencies, as well as interest rates, right? We've been seeing dollar trading not just higher, but much higher, right? And when you have runs like this, it's generally not just going to be because of something technical. If you have the technicals and the fundamentals aligning, that's what's going to give you these clean A+ price runs, just like this here. So let's get down to the business here today. Let's start top down here on the monthly time frame. Let's clear all the drawings. So today I planned for this one to be a shorter one, just to share my initial thoughts. And one of the reasons why I'm just sharing my initial thoughts, it's not that I want to keep anything from you guys. It's because the clarity is going to be after the elections, in my opinion. So same thing with like non-farm payroll. I'm not going to put a whole lot of weight into my analysis on Thursday when I know on non-farm payroll Friday, we're going to be hundreds of handles away from where we're at. So it's essentially the same thing I'm doing with the elections on Tuesday. Because I know we have elections on Tuesday, I'll just look at the markets again after that hits the market. All right, because then once that happens, we'll have more clarity to work with after the majority of the manipulation has taken place. So everything I'm sharing here, keep in mind, it's a very loose bias because we have elections coming up on Tuesday, and I'm going to elect to keep the cards close to my vest until we get to that period of time. As of right now, though, we did see the market traded below this sell-side liquidity pool here. We've been looking for a bullish month of August going into September. This imbalance here, we've closed above it. So we see a nice closure above this fair value gap. And now we'll see if the market can reach higher into the buy side based off the monthly candlestick. Weekly time frame, this imbalance here was used as a target, but once we closed above it, we then expected to do what? Serve as an inversion, right? So because we're bullish, gaps on the left side of the curve aren't a means of selling off. It's going to be a means of getting above it, using it as support and expanding higher. So to the upside, we have the buy side here, this small inefficiency, buy side here, here, and here. And those are all going to be upside targets of interest as long as institutional order flow remains bullish, which it is extremely bullish for US dollar. Take off the buy and sell buttons. So I'll be looking for us to remain supported inside this inversion fair value gap here on the weekly chart. And as long as that remains true, we'll be looking for higher prices on US dollar. Daily time frame. Using the same weekly inefficiency here. We see the market trades lower, drops down to this last down close candle, gives immediate responsiveness, which we want to see, trading to the upside. So now we have buy side here and buy side here. And you can see these are relatively equal. So it'll be a strong draw going into the week. Through that, you'll want to have this fair value gap extended through, and this one here on the daily time frame for key levels as we get through the buy side liquidity here. And then longer term, we have the relatively equal highs here as a longer term draw, right? And the market is extremely bullish because we have all these imbalances being left open and things we've been covering for the past 3 to 4 weeks. And then obviously, as I was saying in the newsletter, there's further insights as to commitment of traders, seasonal tendencies, and how all that plays a big role in everything that we were able to predict real time here for you guys. So moving right along, let's get into the bond market, right? So bonds absolutely cratering. We're just going to look at the 10-year note here. I believe this is the 10-year note. Let me double check. Yeah, so we'll just look at the 10-year today. That's enough. Good enough for government work. So weekly time frame, as you guys remember, just as we were bullish dollar, we're bearish treasury bonds, right? And we had the weekly imbalance here that when we were up here was a target for us to draw down into. But if you guys remember what we were sharing here real time, for us to remain bearish and keep selling off, I need to see the market do what? Get below it, use it as inversion. We did here. You see how it closes below, trades up, can't get above it, sells off, right? That's what we want to see. That's what we look for in an inversion fair value gap, right? And this is what's allowed us to trust higher dollar, right? So you see all these factors come together to just give you pinpoint precision to know what you're looking for, and more importantly, why you're looking for what you're looking for. Again, so bonds remain extremely bearish. We have the layered sell side here. So I'll be looking for the market to nosedive down into that, right? And as long as that remains true, we will be seeing higher prices on US dollar in the near term. So there's bonds. Usually I get asked about forex. It's the same thing, guys. If I'm looking for higher dollar, then you should be looking for what? Lower euro, lower pound, right? Very straightforward. If it has, like, here's GBP, pound, US dollar. If it has US dollar second in the name and dollar's bullish, then we're looking for sell models in pound. We're looking for sell models in euro, in Australian dollar. Right? It's a very easy way to keep it organized in our mind. That's the business there. And let me get into indices. So let's start with NASDAQ. So you guys can see weekly time frame, not the cleanest price action that we've been seeing for the past, what would you say, about 5 weeks. So about the past month and a half, past 6 weeks, it's been really sloppy, wicky, back and forth, indecisive price action, right? So whenever you see a lot of wicks, a lot of back and forth, it's indecisive. And why would that be? Well, because we have elections on Tuesday, right? So there's a reason why, again, we say the things we say. If I'm managing risk, if there's a month or a few weeks where I'm significantly dialed down on risk, those are things that I'm actively sharing with the group and how I'm managing those things, because this here is not a surprise, right? The back and forth price action is to be expected. Why? Because again, there's that uncertainty ahead of Tuesday. It's not to say that there's no buyers and sellers and that's why it's not moving, but it's being held for the main event, right? Because if the market goes consolidation, expansion, and we're expecting expansion going into Tuesday, because there's going to be all types of large ranges after Tuesday, then what's likely to happen before that? Let's look at the 12-hour chart. A consolidation period, right? So that's why I've been managing expectations very heavily in these market conditions, because I know the cleaner price action is more likely to be on the other side of this week, right? So that's why I'm electing to be patient and be disciplined, because again, this business is all about what you can keep, not what you can make. Every trading style can make money. And if you've traded with the multiple other trading strategies, then you know that's true, right? You can absolutely make money trading anything. But again, the difficult thing is knowing how to keep it and what skill sets allow you to keep money, right? And that's one of the most important things to keep in mind if you're unprofitable, because it's probably not that you can't find winning trades. It's probably the fact that you can't keep what you make. So having skill sets, learning how to preserve your equity is just as, if not even more important. Well, it is, but it's actually much more important, but then what you can make, right? But in our minds as traders, we think of the opposite. We think about what we can make, never what we can lose. But something funny happens when we focus on the risk, the reward just takes care of itself. So lesson to take away from this one, make sure your risk is managed and the profits easily take care of themselves for you. So 12-hour time frame, again, you can see we've been in a lot of this back and forth price action where it's not in a hurry to go anywhere, right? It's building a lot of candles on top of each other, not in a hurry to leave this range. And again, I suspect we're likely going to leave this range going into the coming week. So let's go back up to that daily chart. Well, actually, let's go back to the weekly. I wanted to show the 12-hour to highlight the range-bound consolidation we've been in. But we've been watching this imbalance here. Let me make that blue. Watching this imbalance here is a key level. We traded up into it. Previous week, we traded higher, cleared out previous week's high, and aggressively sold off, attacking the previous week's low. So nice power of 3, open, high, low, close. But now we're back down below this weekly fair value gap. So if you guys will recall, the bias has been bullish simply because I'm not trying to call a top in index futures. And I'm also not saying a top is in. However, leaving this weekly fair value gap decisively is not boding well for strength for continuation higher, because now we've traded down through this fair value gap. Whereas if we're bullish, we'd want to see it get above it, close above it, use it as support, and rally, right? So we're able to use these signatures to determine what the algorithm, what the market is communicating that it's likely going to do going forward. Again, however, not holding on to that bias too heavily. I'm not bearish, I'm not bullish, I'm neutral. After the elections hit, I'll have much more clarity, and I'll be sharing my long-term targets to not just the private, but even the free community as well, just so you guys can have my ideas and insights and what it is that I'm looking at going into the rest of Q4 of this year. So let's drop down to the daily time frame. And we'll just use this fair value gap here on the daily. See, we had equal highs. Market ran up into that. We could not sustain the highs though. And then we aggressively broke down on Wednesday, pulling back down into the range. From there, the market attacked the sell side here, which was again the previous week's low. And then Friday was relatively uneventful, staying inside the range of Thursday for an inside day, which again is to be expected. After large ranges, we generally get small ranges. So what I'll be looking at going into this week, we now have these smooth lows here. I'm not saying we have to get down into that tomorrow, Tuesday. I'm going to see what happens. And then again, most of my focus is going to be Wednesday and beyond. So we have relatively equal lows here that the market could draw down into. However, since we have a fair value gap here, I'll favor the market trading up into that early in the week. And then how we trade there will give me the insight I need to determine if we're going to keep selling off or if we're going to continue making higher highs. So with that, that's the business going into this week. Those are the factors I'm weighing out. Do keep in mind, though, if we drop down into a 12-hour or even a 4-hour, again, you'll be able to see very clearly that the market has been in a range-bound consolidation, right? So it's very important to manage expectations, not be pushing too hard in these types of market conditions, because it's very easy to draw the account down, or worse yet, blow an account if you're pushing too hard in these conditions where it's just not moving a whole lot. Not to say there's not opportunities, but again, you do have to know exactly what you're looking for and know how to manage risk if it's not giving you what you're looking for that particular day. So keep in mind, we're in a range. These lows here are nice and clean, right? Because the upside here, we've attacked buy side once, twice, broken down. So now these sell side liquidity pools here look like an easy target for the algorithm to reach down into. One of the only things that may make me uncertain is, do they want to leave these lows and then run on that liquidity after the elections? And that's what it is that makes me uncertain, which is why if I'm uncertain, I'm very comfortable waiting till I have certainty, till I have clarity. Because the good thing is we know what we're looking for. So if there's ever a period of patience or having to wait, there's nothing to be concerned with, because we know what we're waiting for and what's going to allow us to engage high probability trading conditions. So with that, guys, that's what I had planned to share today. Not too much in terms of targets, levels like we usually have here. Then, they deliver like gangbusters. But today, looking to keep this one lighter, just to share my expectations. And again, how I'm attacking the week going into elections. So again, after Tuesday, we should have much more clarity on how we're going to frame long-term, intermediate-term setups across all these markets. But again, I'm expecting things to get shaken up in a big way going into the elections. So with that, again, you want to brace yourselves for that. And we don't want to be taking any crazy wild risks ahead of the elections, because there will be lots and lots of volatility going on. And then if you look at the civil war narratives and things that they're trying to push in the headlines and whatnot, it could be an interesting week ahead, and that's absolutely going to impact the markets. So I'll take a few questions just in case there's something I didn't touch on, but going to look to wrap up my business here relatively shortly here today. Tor, will you discuss gold? Yeah, let's take a look at gold. I think gold's had a bit of a retracement off the highs. Yeah. So gold's still pressing higher, right? Gold's still in a buy model. Key levels for gold to watch will be this imbalance here. Notice how we closed down below the fair value gap. We traded higher. We rejected consequent encroachment. So that's indicating some weakness. We have the up close candle here. Bullish order block, which we also closed down below. So you'll want to watch this down close candle here. If we stay in the upper 50% of that candle, that'll be bullish. If we start to accelerate down through that, we'll look for the sell side here. The rest of that daily fair value gap here and here. And that's what I'm looking at on gold. I'm not trying to call it top though, so you do want to keep in mind that order flow is still bullish top down, but we could look for the market to want to poke its head into this weekly fair value gap here, especially after the week close that we saw last week. So that's the business on gold. I'm not terribly interested in calling gold too much. Yeah, so the sell side here looks really nice for gold. That daily fair value gap that we had labeled, drop down, trade up, uses the low end as resistance as we'd want to see, leaves the upper end open, selling off, and now we have relatively equal lows here that seem like an easy draw, because again, anyone that's long, where's their sell stop going to be? Below the lows, right? So that seems like a pretty easy draw going into next week. However, again, elections can shake that up a bit, so what I'm calling out this week, and really not any week, but we should not be betting the farm on anything I'm saying today, right? Because again, that can all be shaken up going into Tuesday. So with that, hope that one was insightful, guys. If you guys have any questions for me, I will take those now. Lucid, do you think last week's sell-off was manual intervention, as you were referring to, institutions going risk off? Yeah, so good question, Lucid. As long as we've been in that range, my expectations have been heavily managed because of, and it's really hard to say. So to answer your question, it's hard to say. That's why my expectations have been heavily managed inside the range. The move yesterday, or not yesterday, but on the last trading day of the week, which would have been Thursday, what that is attributed to, it's really hard to say in this climate, just because there's so many things going on right now worldwide that it makes it really difficult to pinpoint and say this is exactly what it was. It could be the tensions in the Middle East. It could be the things going on with the elections, with now they're already talking about voter fraud. And like I said, I'm not here to have any of that conversation, but there's just so many things that are being thrown at this market. It's really hard to say what it is. One of the things that do help us determine if it's algorithmically being delivered is how we read price action, right? And if when we're reading price action, is it respecting the levels that we want to see? Is it delivering with precision like an algorithm would? And if it's not respecting levels, if it's moving quickly, if it's sloppy, it's not respecting levels that we look for, then those are times when I'm generally able to predict that it's sloppy, it's likely being manually intervened, and I'm not in a hurry to push too much in this. So it's really an experience factor, but being able to see how the algorithm normally delivers, how it normally paints over certain levels, and then you're able to appreciate some of the manipulation that occurs when it happens. And a lot of Friday's drop, I don't know how artificial it was. I mean, obviously the market makers are making the market. So with that in mind, a lot of things are going on in terms of bullish narratives. So for example, a lot of folks are saying, oh, Trump's going to win. It's a lock. So because of that, the markets are really liking that, right? And the markets are really strong, expecting a Trump victory or whatever. And they sell that narrative to the public. And then what do? They literally sink it 400 handles after I see those narratives. So saying all that to say, man, there's a lot of money on the table right now to be taken. So when it's in their best interest to manually intervene, they will absolutely do so. Not all the time we can predict it, but when we can see more aggressive repricings than we normally expect, we don't see the precision elements that we normally look for, then that's usually one of the surest elements that it's likely being manipulated and being messed with. Reaper, last week you said don't be shy and ask questions. I have a few. Yeah, lay them on me, Reaper. What's going on, brother? Daniel, oil, please. Yeah, let's take a look at oil. I'll touch on oil here quickly. Yeah, oil's trash right now, other than the scalper's market, right? So if you're a scalper, that's very different. But higher time frame, I don't have higher time frame visibility, because if you've been with me for any length of time, you can look at this chart right away and determine what it's 50-50. Why is it 50-50? Well, we have a dealing range from high to low. We're trading in the middle of the dealing range with equal highs and equal lows. So what can you hang your hat on in this market structure and say it's easily running for sell side lower prices, or it's easily running for buy side higher prices? I don't have that here. So because that's the case, there's nothing for me to call out on this market. But what we can do is refine into the lower time frames, right? And we can look at the daily chart. Daily chart, I have no clarity. Outside of, we opened with a gap down from where we closed, where we opened. That was an easy draw for last week. So other than that, just have to read order flow on your lower time frames. Allow the market to tell you where it's going to go session to session, day to day, using daily profiles, using institutional order flow top down, and you'll still be able to sort out price runs even in what we would consider lower probability market conditions. But if you're a scalper, again, there's opportunities every single day. Joe, crude oil had a very inconsistent change in price delivery. Yeah, definitely. And if you look at, for example, how we gapped down $2.69 a barrel. Crazy manual intervention here, but that's because of all the things going on around the world, especially more in the Middle East. Crude oil is going to be much more sensitive to that. And you're just seeing erratic repricings because of everything that's going on with the WAR, Middle East, BRICS nation, just a lot of things going on right now. Lucid, so yeah, NQ has been covered. Cyclops, give the stream a like, guys. Appreciate you, brother. Yes, sir. GC, is it more important to view daily ranges and power of 3 from midnight to midnight, or normal electronic open and close? I've noticed you have the midnight prices marked. Absolutely. For power of 3 for the daily range, midnight opening price is absolutely essential information to either have on my chart or have it written either on my tablet or a piece of paper. You absolutely want to be mindful of those levels for premium to discount, but also to get the best entries, best exits, and understand how all that comes together. But I do still use the daily candlestick as well. So I use the daily candlestick, the information that gives me, but midnight open is very important for daily range power of 3. Yeah, GC, hopefully that answers your question. Reaper, there's a difference between CME futures contract, but with different brokers in the CFD market, there's a huge difference, especially in higher time frames. Not everyone is US citizen. Yeah, I understand that, Reaper. And one of the things that I would recommend doing, like I even have teams that trade outside the US. But what we do is, obviously it's all taken care of by my business, by my company, but we chart all on the futures market. Even if some of my associates may be trading other instruments, either being the CFD, and not that like we all trade futures because it's a US based company, so that's one of the luxuries I have of doing that. However, before when we were trading the CFD market, we can still trade CFDs, but you want to do your charting on the futures market. So if you are trading CFDs, you can have your broker open, but I would not chart on CFDs because exactly like you said, it's inconsistent. There's different highs and lows. And that's one of the benefits of the professionalism of the futures market is it's very, very precise because there's one liquidity pool, right? So everyone has the same high and low. Everyone has the same open and close. So in my opinion, it's worth the $7 investment a month, at least for TradingView. It's worth the $7 investment to have real-time data. I would chart through the futures market. And if you're trading CFDs, do your entries, do your executions based off what you're seeing with the futures data. Because in my opinion, if you are using the CFD, it's an okay start, but there's so much data points you're missing out on with regular trading hours, with new week opening gap. And not to say you still can't get that information, but it's just going to be slightly skewed because you're working in the liquidity pool of whatever exchange you're trading the CFDs through. So that's how I would manage it. To be a trader, you have to have skin in the game. So I would recommend getting real-time data and studying with that. If you're not able to do it, you can make the CFD charts work, but I would look to put yourself in a position where you can avail yourself the resources that you need to trade at a high level, if that's something that you want to do in a serious capacity. Because to trade, to do anything, you have to have skin in the game, right? You have to be able to put yourself in a position where you can have a laptop, have a trading account, have your softwares, and you have to be able to have that and get to that point to be a trader. But again, maybe you're not at that point right now, or maybe many folks that follow us are from other third world nations, and maybe you can't have those resources right now, right? And maybe that's the case for you. But here's one thing to keep in mind. If you just keep studying, if you keep learning, and you get good at the skill set, people will absolutely fund you. People will absolutely give you the opportunity if you learn the skill set. So maybe you don't have the ability to get the best laptop, and not that you need the best laptop, but to get yourself a laptop, to get TradingView, to get real-time data, because maybe you're from a nation where that's a lot of money to you. If that's the case, keep pushing, right? Keep learning the skill set, because people will absolutely give you an opportunity if you can learn to do this very, very well. Ahmed, we had a smart money reversal at the top, so that's why I engaged the swing short. If we see weakness in possibly 1800s, yeah. If we start to accelerate from here, man, it's going to be a free fall, brother. I'm with you on that one. Joe, yes, Dylan, I see your analysis on crude oil. Thank you, sir. Enjoy the rest of your weekend. Will do, brother. You as well. Ahmed, best of luck. Take care, brother. Will do, man. You do the same. Reaper, once I heard you talked about your personal idea about some kind of TGIF, but with monthly candle in the last day of the month. Can you talk about it? What makes its condition? So that's a little more advanced, but it's really just the understanding that if something happens on one time frame, it happens on all of them, right? So if TGIF is a phenomena that happens on the weekly time frame, then it's something you can look for in terms of a retracement on other candlesticks as well, right? So if it makes sense for the candle to retrace off the high, then that logic of the 0.2 to 0.3 retracement level isn't just limited to the weekly time frame. You can also use it for the monthly. You can use it for the daily. Like if you want to know where the daily range is likely to close, then you can use TGIF on the daily range as well. So the concepts are essentially fractal, meaning they apply to all time frames. Is what that means. Eslam, hello, Dylan. I had a question regarding the previous video you uploaded on Tuesday at 9:30. Review at 1 minute. Where the swing took both sides, small buy side, then expanded sell side, then expanded higher. The question is, how can you get the correct move and not falling victim in the Judas swing? Really, really good, Eslam. Good question. Lucid, thanks, Dylan. Enjoy the rest of your weekend. Will do, brother. You as well. One of the key things to the Judas swing is what is a Judas swing? Right, a Judas swing is a time-based manipulation. So because it's a time-based manipulation, that means it can be scheduled. So one of the keys is anticipating the manipulation. And then once that manipulation happens, then we're able to go in and trust what we're looking for. So it's always time first, then price. So that first price swing, and the Judas swing can be traded. I mean, if you can anticipate, you can trade that run. But generally, I'm letting the Judas pass, because that's usually going to be just a short, quick run to get traders off sides. And then generally, I'm looking to get positioned for the distribution move of that day. So the key thing is going to be studying the timing element for the Judas swings. I recommend Pepperstone for anyone trading CFD. They have good gaps. Awesome, awesome. So someone in the community here sharing that for those of you guys that do have to trade CFDs, I know there's different options, and they're saying Pepperstone is one of the better ones. So appreciate the insight, brother. How often do you use confirmation SMT for trades? Is there any better signature? Well, there's actually lots of signatures. SMT is one that I do use. I'm always looking at S&P, NASDAQ, and Dow. I have them on my screen at all times because I am measuring the relationships between the highs and the lows for SMT purposes. Absolutely. Awesome, guys. Appreciate the questions here today. Would stay here and take more. However, I do have to get going. I was glad I was able to get on here with you guys to get this information here shared ahead of the new week. Hope it was helpful to you guys. If you didn't get your question answered here, I'll see you on the next one, or you can share it in our free Discord, which is now opened up, where you can join, get value, get insights, and learn every single day. So with that, guys, I will see you on the next one. Take care. Have a great rest of your Sunday. Stay safe. And remember what I shared. Better, cleaner price action will be after the U.S. elections. Thank you, guys. Have a good rest of your day. See you, GC. See you, Dustin. Eslam. Take care, brother. Will do, Chris. You have an awesome day as well, brother. Joe, take care, my man. We'll see you this week. Bye, folks.